Welcome to Breaking News to Trading Moves. Today we are looking at a key development around big tech's power needs, and more specifically, what it's doing to investment strategies across the energy sector.
We've been tracking some information that details a major move by Meta. It's all about securing their long-term power supply. I mean, their AI data centers are growing so fast,
Right.
and they're making purchasing commitments that could really define their infrastructure footprint for decades. So our goal today is, well, pretty straightforward. Let's analyze the move, understand the deal, and then identify the specific companies,
Mm.
who might benefit and who might face some challenges from all this.
Okay, let's get right into the nuts and bolts then. We're talking about Meta, the company with the ticker META. They've put together several agreements that put nuclear power right at the center of their growth plans.
That's the core of it, yes. What we've seen is Meta signing several of these long-duration power purchase agreements.
PPAs.
Exactly, PPAs. And the length here is just so important. We're talking 20 years.
20 years, that's a long time.
It is. And these contracts lock in power from 3 existing nuclear plants. Specifically, the Perry and Davis-Besse plants in Ohio and the Beaver Valley plant over in Pennsylvania.
And these agreements, they were made with Vistra, right? Ticker VST.
That's correct. Vistra owns and operates those plants.
So this one move secures existing reliable power, but that's not where they stopped.
No, not at all. That's the immediate fix, securing current supply. The second part is really aimed at future tech. Meta has also announced partnerships with both Oklo, that's ticker OKLO, and a private company called TerraPower.
TerraPower. That's the one backed by Bill Gates, isn't it?
That's the one, for those of you keeping track.
So why these partnerships specifically? What are they trying to achieve?
The whole point is to support the development of small modular reactors, or SMRs.
SMR.
So for Meta, you can see it's a clear two-pronged approach. They get proven baseload power right now from Vistra's fleet, and at the same time, they're investing in this advanced reactor technology to make sure they have a scalable supply for the future.
And the total scale they're aiming for is, well, it's quite large. What are the numbers?
The goal, when you combine the existing plants and the future SMRs, is to add something like 6.6 gigawatts of reliable nuclear power
6.6 gigawatts.
by the year 2035. That's a serious commitment timeline tied to a very serious power load.
6.6 gigawatts by 2035. That's enough to power a few major cities. So this brings us to the wider context. Why does one procurement decision by one tech company get this much attention?
Well, it comes down to the duration and the type of commitment. When a company like Meta makes a move like this, it isn't just a press release about going clean. This is real, long-duration demand tied to actual infrastructure. AI data centers are just different.
They can't handle interruptions.
Exactly. They need highly reliable 247 baseload power to keep running. So this agreement, it's a validation that nuclear is being chosen to meet that continuous high-density demand.
That distinction is so critical, isn't it? The difference between standard corporate energy use and this AI baseload requirement.
It is. But what really gets the market's attention is the financing mechanism that a 20-year commitment implies. I mean, historically, the big challenge for nuclear has been the massive upfront cost and the very long construction times.
Sure, banks get nervous about projects that won't see revenue for a decade.
Of course. But by signing these contracts that span decades, Meta is basically absorbing a huge piece of that revenue risk. Their willingness to commit so far in advance, it stabilizes the balance sheets for these power producers. And that makes it much easier for them to get more funding to maintain or extend or even build new nuclear capacity.
So it's not just that Meta is buying power, they're effectively acting as a capital partner here.
That's a perfect way to put it.
Okay, now that we get the scale and the mechanism, let's talk about who's positioned to benefit. It seems like we can break the market winners down into about 3 groups.
Exactly. Let's start with category 1. The established nuclear plant owners and operators. These are the utilities, and they're seeing an immediate re-rating of their assets.
Okay, give us the names and the rationale here.
Well, the primary beneficiary is Vistra, ticker VST. They're the direct counterparty. For them, these long-term PPAs reduce revenue risk and give a solid financial reason for capital upgrades or, life extensions at Perry, Davis-Besse, and Beaver Valley.
Right, they get cash flow visibility they just wouldn't get from conventional merchant power sales.
Precisely.
Now, what about a company like Constellation Energy? That's CEG. They weren't part of this specific deal.
No, but They benefit from what you might call a rising tide for nuclear valuation. When a major hyperscaler like Meta comes out and publicly says that existing nuclear plants are vital for big tech's future, well, that validates the entire asset class. So Constellation, ticker CEG, which has the largest nuclear fleet in the U.S., sees the market perception of its business model improve.
And its ability to attract similar long-term contracts in the future goes up.
You got it.
That makes sense. Okay, category 2. The SMR and advanced nuclear developers. These are the companies building the tech Meta wants for that 2035 target.
Right. And for these developers, this is about more than just money. It's validation. Having corporate offtake support like this from Meta, it's a powerful tailwind. It validates the technology. And that makes it easier to get financing to gain credibility with regulators.
And the companies here?
The names to watch are Oklo, ticker OKLO, which is a newer public company, and also Niscale Power, ticker SMMR.
So when a company like Meta publicly partners with a developer like Oklo, what does that practically do for their timeline?
It speeds things up. It de-risks the project in a major way. I mean, securing a buyer before the reactor is even built.
Right.
That streamlines regulatory approvals and gives them the leverage they need to get supply chain partners on board.
Okay. And that brings us to the third category, the grid and data center electrical infrastructure providers, the picks and shovels plays, so to speak.
That's a good way to look at it. This requires a massive physical build-out. More data centers, more high-load interconnects. It all translates directly into demand for specialized equipment.
We're talking switchgear, power management.
All of it. Large-scale switchgear, complex cooling solutions, and the high-voltage transmission infrastructure needed to deliver that power reliably.
And who are the key names in equipment here?
We'd look at Eaton, ticker ETPN. They're a major player in industrial switchgear and power distribution.
So they benefit from the transmission upgrades?
Yes, getting the power to the site. And then there's Vertiv, ticker VRT. They specialize in critical digital infrastructure things like uninterruptible power supplies and cooling systems that are crucial inside the data center.
I see. So ETN for getting power to the site, VRT for managing it within the site.
That's the distinction.
All right, that covers the upside. Now, for the other side of the coin, when capital gets directed toward one technology, it often creates some headwinds for others. So let's look at the three groups that might face challenges, starting with the gas-heavy merchant power producers.
Right. These companies could face some incremental demand substitution risk over time. Gas-fired generation often acts as the price-setting unit, especially during peak demand. But if a huge industrial load, like Meta's AI demand, is secured by firm 247 nuclear, that simply reduces the overall market demand for gas to meet.
So the stability of the nuclear supply means less opportunity for gas to capture those high-margin hours, particularly in places like Ohio and Pennsylvania, where this capacity is located.
That's it, exactly. It could soften margins for gas generation during non-peak times. The companies noted here would include NRG Energy, ticker NRG, and Talent Energy, TLN.
Okay, on to our second category. This one is utility-scale renewables, which traditionally rely on the same corporate PPAs that Meta just used for nuclear.
Yes, and this creates direct competition. There's a finite pool of available clean megawatts. Corporate buyers have budgets, and just as importantly, they have grid capacity limits for new interconnections.
So nuclear PPAs are now competing directly with wind and solar PPAs for those same dollars and for those spots in the interconnection queue.
Right. It's not that Meta will stop buying renewables completely, but every dollar allocated to a 20-year nuclear contract is a dollar that's not available for a long-term wind or solar contract.
It just alters the procurement mix.
It does. And if a company can meet its 24/7 clean energy goal with nuclear, it reduces the immediate pressure to sign a PPA for an intermittent resource. This could put some pressure on companies like Next Era Energy Partners, NEP, and Clearway Energy, CWEN.
And finally, a category that really depends on renewable growth. Battery and storage plays. How does a move towards nuclear baseload create potential headwinds for them?
This is a bit more of a nuanced point. Companies in this area like Fluence, ticker FLNC, and STEM, ticker STEM, their business often relies on the need to pair intermittent solar or wind with storage.
Right, to provide power when the sun isn't shining or the wind isn't blowing, to firm up that intermittent power.
That's the core function, converting intermittent power into usable baseload.
But if Meta is securing its 247 power from a nuclear plant, a source that's not intermittent, the need to build storage specifically for that baseload demand is
Well, it's reduced.
Correct. More firm nuclear baseload can lessen the urgency to pair every new clean megawatt with storage in certain planning situations. Now, to be clear, storage is still absolutely necessary for overall grid stability and reliability,
Of course.
but the resource mix for meeting this specific AI demand changes, and that could alter the growth expectations for storage dedicated solely to firming up solar and wind.
That distinction is really key for you to grasp. Okay, let's shift gears a little. What should we be watching for next to track this trend?
The first thing is validation through imitation. Will we see announcements of more big tech nuclear PPAs from Meta's competitors that would confirm this is a sector-wide move, not just a one-off? Also, watch for any Department of Energy or regulatory updates on SMRs. And, very importantly, listen for actual siting announcements for these projects in Ohio and Pennsylvania. And we also have to remember the long-term nature of these SMR projects, which that comes with its own risks.
Absolutely. SMRs are long-led assets. They face permitting hurdles, potential cost overruns, schedule delays. This means you're likely to see price volatility around key milestones like financing approvals or construction permits as these projects move forward over the next several years.
And for anyone tracking the trading side, we should just reiterate the comparison that was suggested when power demand headlines get hot.
Yes. The pair comparison idea is to look at nuclear SMR momentum, so companies like VST and Oklo, and compare that against gas merchant sensitivity, especially for those exposed in the Midwest.
That brings us to the end of our analysis of Meta's nuclear commitment.
I think the main insight here is that the 20-year commitment and the funding support from a hyperscale tech company does more than just secure their power. It effectively makes them a long-term capital partner. And that solves one of the biggest challenges, financing for a sector that has often struggled to fund these huge, decade-spanning projects.
And as always, a reminder that we are just analyzing the material here for your awareness. This information is purely for discussion and analysis. It should not be construed as financial advice or as a recommendation to buy or sell any security. This is purely the opinion of the author of the material discussed.